How about the daily chart of Alphabet, the artist formerly known as Google, where I think they're getting disciplined? Broden says this one's in a similar position. Alphabet's trading below both the 200-day and the 50-day moving averages. Let me see that. The 200-day is this. The 50-day is this. And by the way, let's call it, let's not mince words, appreciably below. It's got a general pattern of lower lows and lower highs. Again, that's what we see over and over and over. Very, very negative. Exactly what they hate, chartists. The 5-day exponential moving average is below the 13-day. Again, just awful. And that's, remember, her personal sell signal. She's saying sell this. In her view, like so many other big tech names, quite a lot of technical damage has been done to Alphabet, especially over the past few weeks. They've turned real bearish, and Broden doesn't believe that they can shift back to bull mode overnight. Of course, she thinks it's possible to get some oversold rallies here. The stock has a lot of resistance on the way up, though. You've got a bunch of ceilings running from 88 to 93. That's pretty far from here. Given the lack of anything bullish in this chart, Broden wouldn't bet on Alphabet breaking through this ceiling. She's so negative. Now, there is one horrifically beaten down tech stock that's actually showing signs of improvement, and that one is NVIDIA, although Broden stresses that this one's still not out of the woods. After spending roughly a year lost in the wilderness, NVIDIA's recently started bouncing, which is really incredible because, boy, it's bounced on bad news. In fact, the 5-day exponential moving average has now crossed above the 13-day. I don't want to obscure that. That's crossed above the 13-day, and that's Broden's buy trigger. It's fired. While the long-term pattern in NVIDIA, though, is still heinous, and that's the long-term is this one, okay, down, down. You know, look at that, down, 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 okay? Broden says the short-term pattern looks a lot better. Since the October lows, the stock's actually made a pattern of higher highs and higher lows. This is important for me because they pre-announced. They pre-announced a bad quarter, and then they did it, and it wasn't good, and the stock bottomed. That's very positive to me. That's only a possibility. Broden also says NVIDIA is not out of the woods yet because the stock's still trading below its 200-day moving average, which is very far above here. And, of course, the longer-term pattern going back to last year remains incredibly bearish. Even if NVIDIA can maintain its recent momentum, she points out that the stock's facing major ceiling of resistance between 147 and 150, another ceiling around 152. So it needs to jump some serious hurdles if it's going to get its groove back, and that's pretty hard to imagine. If you want to make a short-term bet on NVIDIA here, she actually sanctions it. But she does say it's a big risk. I say that as someone who's a big believer in this one longer term. Then again, as I've told investing club members endlessly, this simply isn't a good market for the semiconductor stocks. And I can tell you, the bounce, even though she says it's the best one, I certainly, when I've sat down and thought about all the stuff she's saying, it's inconclusive. Bottom line, the big tech stocks have been hammered from their highs, but the charts interpreted by Carolyn Broden suggest it probably isn't safe to start bottom fishing, even if those charts begin to improve a bit. Amazon and Alphabet simply aren't in buy the dip situation. Like I said, a little bit more positive about NVIDIA because it started to turn, but she says don't get your hopes up for too long.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.